I'm Caroline Hyde. This is Bloomberg Technology. Coming up, Uber sets the time and the place to officially test fly its floating taxis. We'll tell you how it all went down. Plus, self-driving's the future in Phoenix. Why Arizona's capital city is now ground zero for monetizing Alphabet's Waymo. And the NFL teams up with wearable tech. How players can now cash in using their own health data. First to our lead, the rally in stocks continue with the tech-heavy Nasdaq crossing a big milestone in the session. Let's get straight out to Bloomberg News stocks reporter Abigail Doolittle for more. I'm looking up 0.7%, but we are above the all-important figure.
Indeed we are, Caroline. What another risk-on day for the major averages, and especially for that tech-heavy Nasdaq closing above 6,000. And get this, Caroline, the last time the Nasdaq finished closed above a big round number for the first time, 5,000. That was all the way back in March of 2000. So it's taken 17 years, more than 17 years, for Nasdaq to close above another big round number. So psychologically, though, Ari Wald over at Oppenheimer, a technical analyst, he thinks that this is more of a psychological level, though, as opposed to an indication that more gains are ahead. Now, driving the Nasdaq above 6,000 today, we're looking at Netflix, Baidu, and Biogen, among some other winners. But Netflix, one of the top percentage performers, having its best day since October of last year. And Bloomberg intelligence analyst Paul Sweeney earlier told our markets team that he believes this has to do with the company's deal with Baidu, helping Baidu trade higher, as it will help Netflix enter China, the only major market that Netflix has not been in as of yet to date. And then Biogen, a really big day there, a nice beat on both the top and bottom lines. And Caroline, investors there really like a beat from the company's rare muscle disease drug, suggesting that there could be some more growth ahead. Now, relative to the overall strength that we're seeing, just days, weeks ago, there was some talk about whether or not the Trump trade, the reflation rally, whether or not it was reversing. Let's hop into the Bloomberg and take a look at #BTV 6083. These are the three major averages out of the election. We see a beautiful uptrend, and the Nasdaq in blue up top, leading both the Dow and the S&P 500 up 16%. So lots of strength here for stocks in the end of April, Caroline.
So right, and it's across the board globally. We saw Asia rally, Europe followed on, and then US really garnering these news highs. Talk to us also, though, about the earnings season, because we're seeing a lot of the big players we're going to hear from this week also hitting new highs.
Well, you know, it's interesting that you should say that, because Gina Martin-Adams, our equity strategist here at Bloomberg, she told me earlier that she thinks the reason that the tech sector has resumed the uptrend is so far the positive earnings season. But relative to some of the big Nasdaq technology earnings reports to come out later this week, we are looking at lots of the big names, including Alphabet and Microsoft. Both of these companies report on Thursday. Alphabet, of course, everybody will be looking to see whether or not the YouTube ad issues affected revenue growth. Microsoft, Anurag Rana, a Bloomberg intelligence analyst, he's saying it could be their best fiscal third quarter report ever on both cloud and server business. But let's not forget Amazon. Amazon up in a big way year to date. They report on Thursday as well. Now, their last quarterly report was a bit of a whiff, so estimates have been coming down for this quarterly report. In fact, Bloomberg intelligence analyst Jitendra Warral, he thinks that could lead to some upside. And of course, we'll be looking to see what their cloud business looks like. Caroline, let's lastly hop back into the Bloomberg and take a look at a chart as to whether or not all of this strength of the Nasdaq can continue. This is #BTV 3009. It's the Nasdaq relative to its 200-day moving average, a momentum indicator. 11% above that, Caroline. Basically, the most, or matching the most over the last 3 years. And then look at that RSI on bottom. We've looked at the RSI before for Apple. This one is now above 70. It hasn't started to round back down, but this may suggest that around the earnings period, coming out of the earnings period, that perhaps some of this strength of the Nasdaq could consolidate a little bit, something that may in fact be healthy, Caroline.
Technicals on the Tech Show. We love it. Bloomberg News stocks reporter Abigail Doolittle, thank you very much indeed. Now, let's shift gears. The promise of flying cars is inching towards a reality. Uber kicked off its Elevate conference in Dallas, announcing it will test out flying vehicles in Dallas and Dubai in 3 years' time. That's right. Uber's chief product officer says the public will actually get to live in the era of flying cars. Eric Newcomer covers Uber for Bloomberg Technology, joins us now. 3 years till they start testing, but this is all pretty ambitious, whatever timeline you're looking at.
Right, right. And then another 3 years, 6 years from now, sort of trying to have the service going. I mean, I think flying cars are one of these technologies that always feels like it's right around, sort of right over the horizon. So it'll be interesting to see if Uber's able to execute on it. But here they're striking a ton of partnerships, really hedging their bets in terms of which type of vertical takeoff and landing vehicle, as they like to say, but trying to create sort of the infrastructure and the ecosystem to make it happen.
Infrastructure, ecosystem, also talent. They've been hiring from NASA, I believe, in February, Mike Moore. How important was this particular hire?
Yeah, I mean, I think it's, it's sort of an optically important look for the company. We're sort of a savvy technology company. I think it's not imminent enough to say it's key to their business. And I certainly think in a time of PR crisis, it helps motivate the company to say, we're doing something exciting. We're helping sort of convene all these different companies to create sort of flying cars.
And certainly that yet another moonshot rather helps with the valuation perspective as well of this particular company. Competition, talk to us about it, because I was speaking to Brad Stone yesterday, who we were talking about Kitty Hawk and what Larry Page funds. Everyone seems to be wanting in on the flying car.
Yeah, hard to believe it's a coincidence that video from Kitty Hawk showing their flying cars working came out just yesterday ahead of Uber's big announcement. So, it's not just self-driving cars where, in this case, it's Larry Page, Alphabet's CEO, instead of directly the company, but it's still sort of this inherent competition between Alphabet and Google versus Uber. So we see it on self-driving and now on flying cars.
I mean, I've got to say, look, the videos are spectacular and you've got to go and see them, but none of them really look like a car to me at the moment. They look like motorbikes.
Right, that's why everyone calls them VTOLs, vertical takeoff and landing. It's a lot of blades sort of safely, or hopefully safely, sort of packaged in a small vehicle. It looks nothing like a car. I think we're all just very attached to that idea. It's something,
Back to
shorter
the future.
trips. Yeah, exactly. And it's go from San Francisco to San Jose type of an idea. It's not something necessarily you want to take a flight for, but it's longer. You're not replacing your sort of inside the city UberX trip here.
Well, San Jose to San Francisco in 15 minutes would certainly be a joy for many of the VCs and the commuters out there. Tell us what else. This is a 3-day event we're seeing in Dallas from Uber. What else are we going to see? Because it really is the great and the good from the industry coming in and trying to think forward.
Right. So it's, partnerships with the manufacturers, then it's Dallas and Dubai, like you said. Then it's, batteries so that they can sort of try and better charge the cars. And then it's even sort of the real estate, creating partnerships so the cars would literally land here. So it's trying to bring a lot of people together. I think they have 5 different manufacturers they partnered with, and they're probably going to be more. So the idea is really Uber can bring the pieces together, help sort of lend its credibility, and then also sort of organizational prowess to all these players that are trying to build the future of flying cars. And that's how they're going to sort of contribute to making it happen. And then they benefit when they have the network at the end of the day, where you're actually, calling the car in their app, and so they get to make money off that without doing some of the heavy lifting in terms of, R&D.
The race is on. What first, autonomous or flying?
Exactly.
Let's see. Eric Newcomer, as ever, brilliant perspective. Thank you very much indeed from Bloomberg Technology. And of course, we'll be able to continue monitoring the events out of the Uber Elevate conference this week. And another story we're watching for you, Alphabet's self-driving car unit, known as Waymo, will be pairing up with the public for the first time ever. The company is letting residents of Phoenix test out its autonomous vehicles. This is a big step for Waymo, which had been testing out self-driving tech for nearly 10 years. And sticking on that car tech theme, Nissan Motors has joined automakers BMW and Volkswagen in allowing the driving data collected by Mobileye chips and sensors to be used in a collective map. Now, Mobileye has been lobbying traditional car manufacturers to both install the mapping tech and then share the data for this effort. Mobileye's chairman has called the gathered technology the, quote, missing piece of fully autonomous driving. Now, coming up, NFL players can now sell their health data, the technology behind it, and the money to be made. Next. And a reminder that all episodes of Bloomberg Technology are now live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. right here in San Francisco. This is Bloomberg. Now, the company Whoop is taking its tech talents to the NFL. The fitness wearable analyzes data and helps athletes tailor their training. And this partnership is just another way for athletes to score big. Compiling this data gives the players the ability to make money on their health for the first time. So why sell personal health information? Let's ask the man behind it, Whoop CEO Will Ahmed, who joins us now from Boston. Will, welcome to Bloomberg Technology. So you're pairing up with NFL Players Association, co-owning the data. Talk to us about the business opportunities here.
Well, you know, our core mission at Whoop is really to empower athletes. And in meeting with the NFL Players Association and understanding their needs, especially around player safety and health, we felt there was an opportunity to partner. The NFLPA has ultimately become an investor in Whoop, and we are now distributing Whoop to every incoming and current player in the NFL. So this is the first time that a players association across any pro sports league has partnered with a wearable technology company, and it's going to be really exciting to see the data and really ultimately improve player safety.
Player safety paramount, but talk to us about the other areas that this data will be used. I'm imagining those who want to perhaps do a little bit of fantasy football might be analysing quite how much sleep one of the players is getting, looking at how quickly they're recovering, and of course the selling of it in the end.
Yeah, so we're going to work really closely with the NFL Players Association and its players to ultimately collect and control this data. And then beyond that, to look at the commercialization. So to your point, I mean, you can imagine a lot of potential buyers of this data. You think about broadcasters and the engagement that they could create with fans to talk about, you know, the recovery of players before games. You know, you've got the offensive line peaking physically, and you got the defensive line run down. You know, how's that going to affect the quarterback's passer rating? I think there's just a lot of really interesting ways that a broadcaster could be talking about this information. And then, you know, also if you think beyond that, fantasy football is becoming a really popular industry. So how can the data be used to empower, you know, fantasy football and connect again with fans? And then beyond those two industries, I mean, I think there's a whole host of health applications in terms of really having the first data set of its kind continuously around professional athletes. And in the process, look, as this data gets more personal, it also gets much more lucrative. So what's unique about this partnership with the NFLPA is it's going to give players an opportunity to generate really meaningful revenue from the value of their data.
So they can springboard off it. This isn't the first time that, of course, some significant athletes have used Whoop. I'm looking Rio Olympics, it was employed. We've seen it across some baseball, but the basketball NBA hasn't liked it. Why not more commercialization, or why not more sports teams going to Whoop and wanting to sign these sorts of deals?
Well, I think the NFLPA was pretty innovative and forward-thinking about where this technology can go for the game. And I think that every league and its players association need to decide for themselves, you know, what's the right process to evaluate technology. We went through a very rigorous competition, actually, with the NFL Players Association, and they had just formed a group called One Team Collective. That was a technology advisory group, and you know, hundreds of companies applied to work with them, and 5 ultimately ended up pitching with them in Houston to their board and its players. And then, you know, we won the ability to go into partnership discussions. So, you know, I think you'll see the other players associations probably take notice of this deal. And, you know, we are looking forward to having more conversations there. And those conversations have begun. And then at the league level as well, I think it's an opportunity, again, to connect better with fans. It's an opportunity to keep players in the game for a longer period of time when they can really understand their health. So, you know, I think everyone stands to benefit, in my opinion, from this technology and from this data.
What about others wanting in? I'm thinking of Fitbit or Jawbone, or are we going to see other companies, wearable devices, trying to offer themselves to other sports teams?
Well, first and foremost, the technology really has to be able to understand an athlete's daily lifestyle. I think what makes Whoop unique is our real focus on recovery. So we can tell an athlete how prepared their body is for strain, how prepared their body is to perform. And also we do a lot to optimize around rate of recovery. So what are you doing the other 20 hours of the day to really perform better as an athlete? And I think that's a story that hasn't been told yet in sports, and it's a real differentiator in this deal because that data, you know, the other 20 hours of the day when an athlete isn't playing a game, that's the athlete's data, right? They own that. So we're now collecting that information for the first time and giving the athlete the ability to monetize it, and I think that's what's so special about the deal.
We'll see where the opportunities arise from. Well, Ahmed, Whoop CEO, great having you on live from Boston with us. Now, a story out of France for you. Presidential runoff candidate Emmanuel Macron has been hit repeatedly by cyber attacks similar to those used to hack US Democratic Party. Now, that's according to cybersecurity consultant Trend Micro, which blames the attacks on PornStorm. It's a group suspected of conducting such hits in more than a dozen countries. Cybersecurity experts have linked PornStorm to Moscow, but Trend Micro has no definitive proof of Russian involvement. Now, coming up, Weibo has run rampant in rural China, helping boost its parent company Sina's bottom line. We'll hear exclusively from Sina's CEO next. And a reminder of our interactive TV function. You can find it at TV Go on the Bloomberg. You'll not only be able to watch us live, but also see previous interviews from our television coverage around the globe and dive into any of the securities or Bloomberg functions we talk about. This is for Bloomberg subscribers only, though I'm afraid. Check it out, TV Go. This is Bloomberg. Now, a story we're watching for you. Remember when Alibaba's Jack Ma pledged to create 1 million jobs in the US after meeting with the then-elect President Trump? There's a new update. Ma announced the launch of a new program to make good on that pledge. Alibaba will hold a conference in Detroit in June to teach US businesses how to sell the companies to customers in China. This is the first part of a larger plan to lure small businesses and entrepreneurs to work with Alibaba. Sticking with China, and Weibo is commonly known as China's Twitter. More than 500 million people use the microblogging site. Its parent company, Sina, has enjoyed exploding revenue growth over the past year, and the Chinese telecom giant says, well, that's largely because of the rapid uptick of Weibo users in rural areas. Sina chairman Charles Chow spoke exclusively to Bloomberg about, well, he plans to keep driving forward.
Last year, we grew our advertising revenue by 100 to 110% for advertising. So that actually is very big. And that momentum is continuing this year. And so you're going to see, on an overall basis, there's still going to be very significant growth in revenues, mainly from advertising, and to less extent from some kind of fee-based services, basically.
And Weibo, the messaging service that obviously provides so much of your revenue stream, you've done a very successful job in growing Weibo's users in second and third tier cities here in China. How much more growth have you got following that strategy? And where are your new markets?
We're still going to grow faster than most of our competitors in terms of user growth this year. But on an overall basis, this market is slowing down. So we are also going to focus on the time span competition. So we are going to increase more sticky products and more diversification in terms of product offering, especially in the video area. And so you see that we have tremendous growth in terms of video usage in short video last year, and also we have seen tremendous growth in usage in the live streaming product. And this year, and we just started to beta testing. It's already in the news, so I can tell you the video stories, similar to the ones that Snapchat has. And so this is the area that we're going to be very focused upon. Video is the key for future growth.
You said you think there's too much money flooding into the tech sector. Are you suggesting that there are bubbles in China's tech sector? And if so, where?
It's everywhere. It's not just one particular area I was talking about. I was talking about internet, business in general. Especially in the last 5-6 years. You see tremendous amount of money pour into the market, whether it's from VC or PE, whether it's from foreign funds or from local funds. There's too much money. So that's why, whenever there is a new concept emerge, for example, live streaming, for example, a news app, for example, like the so-called shared economy, like Didi and Uber model and all these different models, then you see, it's not like dozens of companies being created. It's like hundreds of companies being created. And in theory, these companies will never be successful. But everybody, whenever they have a new concept, they think it will work. They don't want to miss it. So there's a lot of money poured into to create new companies and new businesses. And so the result is that huge competition in terms of market share, in terms of you have to burn cash to get your market share to get bigger. So a lot of competition is irrational in a way.
That was Charles Chow, Senior Chairman, and with Bloomberg's Tom McKenzie. Now, SAP reported sales that topped estimates. We'll bring you a conversation with the company's CFO. That's next. And if you like Bloomberg News, check us out on the radio. You can now listen on the Bloomberg Radio app, Bloomberg.com, and in the US on Sirius XM. This is Bloomberg.
I'm Elisa Parenti, and you're watching Bloomberg Technology. Let's start with a check of your first word news. At the U.S. Holocaust Memorial Museum's National Days of Remembrance today, President Trump vowed his administration will confront anti-Semitism and stamp out prejudice. He also accused Holocaust deniers of being accomplices. Meantime, a judge blocked Trump's order to withhold funding from so-called sanctuary cities or communities that limit cooperation with immigration authorities. The administration may ask the Court of Appeals to overturn that ruling. The UN Secretary General says international donors at a Geneva aid conference have pledged $1.1 billion to help war-torn Yemen. Antonio Guterres kicked off an aid conference in Geneva today aimed at better addressing the crisis that he says has been overshadowed by Syria's war. Pope Francis will arrive in Cairo this week as a friend and a messenger of peace. Twin bombings of Coptic Christian churches in Egypt on Palm Sunday killed 44 people. Francis says he hopes this pilgrimage will be an embrace of consolation to Christians in the Middle East. The TSA says the U.S. will not make changes to its in-flight ban on electronics devices. The Homeland Security Department had warned more airports could be added. The ban on 10 Mid-East nations took effect on March 21st and prohibits electronic devices larger than a cell phone. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti, and this is Bloomberg. It's just after 5:30 p.m. Tuesday here in New York, 7:30 Wednesday morning in Sydney. We are joined by Bloomberg's Paul Allen. He has a look at the markets. Good morning, Paul.
Morning, Elisa. Well, trading resumes in Australia and New Zealand today after the Anzac Day break, and it looks like it could be a good day as well. ASX futures already pointing up almost 0.5%. We're keeping an eye on BHP Billiton at the open, the world's biggest miner, due to report third quarter production numbers. And later this morning, we'll have first quarter consumer price numbers out of Australia as well. And they are expected to show inflation returning to the middle of the Reserve Bank of Australia's 2 to 3% target band. The RBA Governor Phil Lowe will also be giving a speech later tonight. He won't be taking any Q&A, but he may address those inflation numbers, whatever they may be. Nikkei futures also looking positive, and keep an eye on Japan Post. It booked a $3.6 billion write-down charge on its toll holdings. It acquired that Australian asset back in 2015 for almost $5 billion, and now says it might have paid too much. Some earnings to watch out for today as well: Hyundai, Canon and Line Corp. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This This is Bloomberg Technology. I'm Caroline Hyde. And as we discussed at the top of the hour, it was another banner day if you're long equities. Asian, European stocks rose, followed by US stocks turning in the best two-day performance since November, with the Nasdaq closing above 6,000 for the first time ever. Bloomberg editor-at-large Corey Johnson has been looking at all the key movers of the day. Corey, it's fascinating because we've got the thick of earnings season upon us at the same time as this crescendo back into tech stocks. T-Mobile was an interesting one, fighting back against AT&T because we had yet another mobile company coming out with its numbers, and it wasn't so pretty for AT&T.
Yeah, so I think probably the biggest story in technology right now is the big changes going on in the world of telecommunications. And you know, the reason we care about earnings isn't whether or not the analysts are right or wrong. The reason we care about earnings is because it lets us see what companies are actually doing instead of what their press releases announce of their cool new products. And what we see from Verizon last week, T-Mobile yesterday, and AT&T today is a dramatic shift in the business. And so AT&T's numbers, now the stock after hours, it surged initially, then it was down a little bit. But we saw the same thing with T-Mobile yesterday, where the stock didn't move a lot, and they actually had much more interesting report than the post-market trade indicated. The biggest change in what we saw from AT&T was the same thing that we saw from Verizon last week, was that the number of subscribers shrunk and the postpaid subs dramatically shrunk for this company. Yes, it's a small percentage point, 0.3% on the downside in terms of the percentage change, but a very dramatic change in this business. Why is this change happening? It's because of all the things that T-Mobile is forcing on the industry, which is changes by unlimited number of data, the ability to switch between lots of phones, things the carriers just refused to do in the past. You know, it wasn't too long ago that you could only get the iPhone in the U.S. on AT&T. Yeah. And that provided, you know, that the Palm phones were available in other carriers exclusively, and that battle let sort of carriers create a moat around their users. Well, now the users want whatever phone they want. Yeah. They don't want to pay for data, and so they're willing to jump from carrier to carrier. And so the result is we're seeing these subscriber losses big time at Verizon, big subscriber losses now at AT&T, as we just learned.
Record.
Now, the post-market trade might not tell us a lot about this, as we can see from T-Mobile, which went one way after the close yesterday, another way when most of the trading happened today. But John Ledger out there today instantly on his Instagram saying, holy, well, I won't say everything that he said because I want to actually keep my job, and he hasn't volunteered to pay my FCC fines yet. But he said, holy whatever, AT&T missed consensus by 100,000 prepaid nets. Gee, I wonder where they went. Well, where they went was to T-Mobile. Yeah. And you've got consumers really willing to move around here. So there's a lot more volatility introduced in the business models. I surely expect that to be reflected in the stock eventually.
It's interesting you're mentioning Apple, and one of the key movers in Europe was an Apple supplier. I was keeping an eye on AMS. It's Swiss-listed, Austrian-based, and the volume on this stock was phenomenal when we saw it jump, but we're seeing it up some 20% in trading. Then it's again down to earnings. This again down to how we're seeing the overall backlog of orders looking. And this is a company that's not just dependent on Apple, but it's got Samsung and Huawei. It's all about 3D sensors. It's about autonomous vehicles as well. I'm loving AMS in Europe. But another US stock
you mentioned trading in Europe. It hardly trades all in the US. In fact, hasn't traded in many days in the U.S. We've traded, I think, a few hundred shares today, so it's
a small stock.
Interesting. Yeah.
It's a small stock, but it's one that clearly moves significantly on the back of its earnings, and one that moves significantly on the back of China. Netflix, that was, what, another record for this stock in the U.S.?
Yeah, interesting. You know, Netflix is a stock that's, not a very big company in terms of revenues and everything, but moving fantastically with the announcement that something that Reed Hastings has talked about for many quarters, saying they're going to be in China, they're going to be in China, they're going to be in China. They finally strike a deal with a company that's affiliated with Baidu, and the stock surges tremendously on a very positive day for the market, but shares of Netflix up well over 5%. Why? Because the growth story for Netflix has been all about international growth, and international has become a big part of the company. The question is, where could they possibly go next? China is that thing looming out there. Maybe this is a clue that China is possible.
And just very lastly, Texas Instruments, keep an eye on the chip maker because it's, what, at a 2,000-year high?
Yeah, look, Texas Instruments hitting on all cylinders here, and you can see the reflection in the stock price. Texas Instruments just off to the races in terms of revenue growth. And really, the big story of TXN is the change, or TI, if you want to just call it what the company as opposed to what stock ticker is. And TI's revenue growth rate really dramatically turning around from a shrinking business to a growing business to a growing business into the double digits now. 13% revenue growth on a year-over-year basis. And what that means is that the stock continues to benefit from strong results.
40% in the past year. Nice.
Not bad.
What a whirlwind. You brought it all to us, as ever. Corey Johnson, thank you very much. It's going to be all over the rest of earnings season for us as well. Remember, about a quarter of the NASDAQ has come so far. Now, SAP, German company, reported sales topping analyst estimates for the fourth straight quarter. Businesses are spending more on cloud computing software and SAP's new version of its flagship suite. Now, Bloomberg's Matt Miller and Guy Johnson spoke to SAP CFO Luka Mucic from the company's headquarters in Waldorf, Germany. They started by asking how the business software company is faring in one of its top markets, the US. Take a listen.
The US in particular did remarkably well with double-digit growth, both in software licenses as well as in the cloud. So we're off to a strong march, both across mature but also emerging markets, which is good news for SAP.
Let's talk about, so that's your established market and really your established products doing quite well there. What about the new S4 suite? How is that running? For example, how many people are running it in production versus testing? And what's your goal for getting customers up on the S4 suite?
Yeah, S4HANA did have a remarkable first quarter as well. We were up in significant double digits. We have now more than 5,800 customers on S4HANA, and we're seeing more and more go live. So this has a self-fortifying effect as the live customers then come back as references, telling and spreading the news to other prospects. So we see actually our growth rates in S4HANA accelerating. S4HANA is one of the key reasons why our software license business is growing so strongly, as is our analytics portfolio as well as our CRM portfolio. But S4HANA, more importantly, also invigorates growth across our entire portfolio, including our cloud LOB solutions. You can also see this from the fact that our order entry from deals above the 5 million euro mark was actually up from 17% of total revenues in Q1 2016 to 27% in Q1 2017. So that's what I really call a cross-fortifying effect across our entire portfolio.
Luka, good morning. It's Guy in London. What would a 15% US corporation tax rate mean for SAP?
Well, of course, it would mean a lower effective tax rate as our business is growing in the US. Any lowering of the corporate tax rate would, of course, be beneficial to SAP. We had actually a rather good performance in Q1 from an effective tax rate perspective. We have remained lower than in Q1 of 2016. Let's see what the future brings. I think there is still a lot of time that needs to pass until we see entirely clear on the US tax reforms. But certainly any reduction in the corporate tax rate would also benefit SAP.
Would it change the way you invest in the business geographically?
Well, I would say we have always been very committed to the US, not only as a distribution market, but also as an R&D center. We have round about 19,000 employees already in the US, and we continue to invest in our fast-growing cloud assets that are domiciled predominantly in the US. So we double down on areas like SuccessFactors, our HR cloud solution. All of our business network solutions, Concur, Ariba, Fieldglass, are already seeing a lot of additional investment. And of course, we are looking to continue this and believe that with a friendly environment, both from an investment climate perspective as well as the surrounding regulatory conditions, there is no reason to hold back. We are actually quite bullish about the American market.
That was the SAP CFO, Luka Mucic. Now, meantime, the CEO of Ericsson is promising to step up efforts to cut costs and get rid of unprofitable contracts. In a bid to revive the struggling Swedish wireless network provider, CEO Börje Ekholm has promised to get rid of more than $1 billion in unprofitable contracts.
Our business in networks is stable, and we see we're actually very competitive with our new radio platform that was introduced about a year ago. We've said that we target a 50% penetration for this year, and we're well on track to do that.
Now, Ericsson announced that Ekholm would take over as CEO on October the 26th. Since then, the stock has gained 28%. Coming up, Apple CEO Tim Cook is heading to space to find talent for its next augmented reality project. More details next. This is Bloomberg. Now, Google is attempting to combat the circulation of fake news. The internet giant announced that it's rolling out changes to its search results. Changes will include alterations to the search engine's algorithms that choose which pages surface in response to queries. Now, Google and Facebook have taken plenty of heat in the months following the recent US presidential election. Many claimed both companies didn't do enough to protect users from misleading information, propaganda, and, of course, fake news. Now, Apple looked to space for its next augmented reality projects. The Silicon Valley giant hired Jeff Norris, a NASA specialist in AR, to help build future projects. The hire is part of Apple CEO Tim Cook's vision to bring AR hardware to the market as soon as next year. Joining us now to discuss is Bloomberg technology reporter Mark Gurman. You helped bring this to our attention, the fact that AR is the next big frontier, and it looks as though space is the frontier they have to go to get the talent.
That's right. They've really been building up this team. We had a big story, and I believe we talked about it on this show in March, that they're building this end-to-end AR team with the goal of bringing functionality to the iPhone as well as a pair of wearables, like you said, by next year. And now they're expanding that with the hire of Dr. Jeff Norris. He was really known for his work in AR and VR in space through NASA. And if you can make it work on space, you can make it work, on planet Earth too.
Tell us some of the mind-bending things that Jeff Norris was up to when it came to NASA.
So he worked on putting HoloLenses on the heads of astronauts in the International Space Station. So,
HoloLenses being Microsoft's
right,
version.
Microsoft's mixed reality headsets, and really being able to come up with new applications for how NASA could use it to improve their scientific discoveries on Mars. He worked on the Mars rover as one of his first projects at NASA, back in the day, almost 20 years ago. More recently, using AR and VR to sort of allow people on the ground that work for NASA to feel like they're actually in space or on Mars and be able to control things from ground control with those headsets.
It is a significant hire because it just shows the focus that Apple has on augmented reality. What about the size of team? I'm seeing analysts like UBS saying that there could be 1,000 engineers dedicated to this. This is big.
Right. I mean, so our report from March said there's several hundred people working on it. I don't know if thousands is correct. Maybe you can hit that 1,000 number if you're talking about people from other teams contributing to it, but I don't believe the core team is above that 1,000. But certainly they are going to all ends of the world, all ends of the atmosphere, the solar system, to use a pun.
Yeah, I love them.
To get people familiar with AR and VR on this project. It's very similar to what they did when they developed the Apple Watch. Hired all sorts of people from every sort of type of project that could relate to health. Now they're doing the same for AR.
And I'm looking at also some of their other hires from Oculus, from Magic Leap. So it's not just the figurehead of Jeff Norris, who's going to be under Mike Rockwell, I believe, who's really spearheading all of this. But there's talent from across the board.
They've hired people from Oculus, Microsoft, especially the graphics industry, Weta Digital. This organization in New Zealand helped create some of the graphics for Lord of the Rings and other movies you would have seen. And it really contributes a lot to AR, having the right graphics for user interfaces, maybe gaming. I mean, they have specialists from across every industry that you can think of that involves AR on this team.
Absolutely fascinating. And now it brings in space. Mark, I know you're going to be all over every single inch of the way as to how they're bringing this augmented reality to reality. Brilliant to have you. Thank you very much indeed. Now, coming up, show business could be close to its first shutdown in a decade. The details behind the Writers Guild of America's strike next. This is Bloomberg. Now, it may be bad news for TV and movie lovers. The Writers Guild of America has authorized a strike that could start as soon as next week. The current 3-year contract expires on Monday, May 1st. And if an agreement is not reached, show business could be hit hard. Joining us now from Los Angeles is Bloomberg's Anusha Sakui. Bring us up to speed, Anusha, as to what writers are feeling so hard done by at the moment.
So last night we got the vote results, an overwhelming turnout from the 12,000 members of the Writers Guild across America voting for strike action. They basically want better compensation for their work in the TV and film business, which has changed radically over the past several years. Particularly, the thing that is really at the heart of this is how they get paid for TV shows, for example. So over the past several years, we've seen this shift to digital distributors, which have much shorter series of shows. Like instead of a 20-episode season of your favorite show, now they might be less than 14 episodes. But writers are getting paid the same and for less work. And you're hearing about more burdens put on writers, like exclusivities for shows, so kind of really freezing them out of writing for other opportunities. So that's what the writers are pushing for.
I see, and the timing is pretty precarious, or could indeed be. We've got upfronts coming up. It's the key time that the big cable companies go and start selling to advertisers. How much could this crimp advertising in cable vis-a-vis digital, for example?
Well, I've been talking to some analysts this morning, and just got off the phone with one who was saying he thinks it sort of depends how long the writer strike goes on for. We've got a period of time here now for some negotiation to happen between the Writers Guild and the association that sort of represents major media companies like Walt Disney and CBS, and they've got several weeks to try and come to a compromise. If they don't, then there'll be a walkout. Sorry, several weeks or several days. Then there'll be a walkout. It kind of depends how long. But there's already talk of shows like The Walking Dead maybe being affected, where you've seen, these shows are sort of split across a year. And Hollywood's a busy place right now. There's so much more content that's being produced to fill out so many platforms like Netflix and Amazon. If you think about all the shows that are across those, let alone that are on broadcast networks, it's a huge pipeline. And there's also Hollywood movies pumping out installment after installment of blockbuster films. So writers have a crucial role in Hollywood, and they're using that leverage right now.
Very briefly, I mean, I'm thinking of when this happened last, 2007. How could it be different? Because they did sacrifice millions in terms of payments when they striked back in 2007.
Yeah, so supposedly the numbers that I've looked at say that the writers lost something nearly $300 million in compensation, but from work that they lost effectively. But the industry itself, there are estimates that said that the impact of the industry was $2 billion. That's a sort of Milken industry estimate. So the repercussions can be huge, and in fact some are still trying to repay loans.
Absolutely fascinating. We'll see if it does come down to the wire. Bloomberg's Anusha Sakui. We'll be tuning in with you another time if indeed it does. Thank you. Now, Twitter is set to report earnings before Wednesday's US opening bell. And the social media company may be the preferred communications tool for President Trump, but it's facing its first revenue decline since going public. Bloomberg's Scarlett Fu took a look at Twitter for the latest edition of The Numbers Don't Lie.
Twitter stock, which is the white line, has been on a pretty steady decline. The blue line, that's revenue, has staggered to a 1% gain last quarter. So far, things have not improved since Jack Dorsey, the co-founder, took over as CEO in 2015. Revenue growth is not forecast to turn positive until 2018. Now, analysts expect a 14% drop in the first quarter, or I should say the fourth quarter of 2017, but first quarter of the fiscal year. Now, Dorsey originally set 2017 as the year that Twitter would stop losing money. Analysts, however, don't expect it to be profitable anytime soon. Twitter now says it is focused on making progress toward its goal this year. The sales headwinds come as user growth stalls. You have Comscore data showing that Twitter app visitors have stopped rising, falling, in fact, from December through February. The question is to what extent Twitter's numbers reflect this stagnation. Now, an absolute decline in use could further risk advertiser confidence after Twitter's U.S. ad sales fell in the second half as marketers shifted spending away from Twitter. You have competition from Instagram and Snapchat that may cause Twitter's share of ad spending to drop. There's one study that shows 11% of surveyed global marketers plan to reduce their spending on Twitter in 2017, 4% more than the nearest pair. And that has Wall Street worried. Of the big U.S. tech names, Twitter has the third lowest percentage of analyst buy ratings. Disney and others last year, we saw how they backed away from a deal with Twitter. The problem is that prospective buyers may not see a clear return on investment at current valuations since Twitter has not been able to revive user growth. We'll, of course, be following Twitter's earnings before Wednesday's U.S. opening bell.
That was Bloomberg's Scarlett Fu, and of course we will be all over those numbers for you tomorrow, because that does it for this edition of Bloomberg Technology. But we'll have full coverage of Twitter's earnings results, plus an all-important interview with Drew Houston, CEO of Dropbox. You do not want to miss it. And remember, all episodes of Bloomberg Technology are now live streaming on Twitter. Check us out. It's at Bloomberg Tech TV. Weekdays, 5 p.m. in New York, 2 p.m. San Francisco. This is Bloomberg.